everyone. My name is Ashton Ekbatani, and this is another session, another webinar on real estate investment. I'm going to introduce you. Actually, I'm going to come back to our guest today, who is Adney. I'm going to tell you a little bit of what we do today and where we are supposed to go in terms of direction. Every week we are bringing guests, speaker to help us with the market update and what's going on here. Now, the reason and the goal for this real estate investment here is to who's ever come in, which is a free invitation. The goal here is to move from what we call an average investor to a savvy investor. And the reason for that, I discovered many years ago, like I'm a real estate agent, a real estate investor as well. I got into real estate investment before I become a real estate agent. I noticed that there are a lot of people coming to me said, buy a land. And the immediate question I asked them, why? They said, well, we wish it would grow better. We think it might go better, or we make a lot of money because our uncle made a lot of money. And I stopped them there. I said, do you have any data? Do you have any information? Do you have anything that can back up your statement, the growth? And they said, no, we feel like it. So stay away from feeling hope. Yes, these words do not belong to real estate, a savvy investor. They do belong to average investor. You know, average investors typically they get together with their cousins, friends, neighbors around the barbecue talking, and the cousin said, I have a good property, you want to buy it? Okay, I'll buy it, without doing any investment, any investigation. So the goal for these webinars every Wednesday here is to move from average investor to a savvy investor. And of course, what it does to a average investor with any wind, any news on the media, you're going to move right and left. And at the end of the day, you will lose. Rather than having a clear roadmap of what you want to do, write down your goals, write down your strategy, what you have to do, stay firm. Your number one helper, here is the word that I adore. It calls why. Always ask, why should I buy this house? Why should I choose this neighborhood? Why should I choose this mortgage broker or lawyer or real estate? Always ask, and that's going to be your greater help. So we are always dealing in the media, in the society with media, with reality and savvy investors, and I want you to stay right in the middle because media is showing you a lot of news that it's hard to filter that through if you don't know what you do. For instance, a few weeks ago, actually a month ago, CHMC said the market is going to drop 18%. And if you pay attention to this page, right down said mortgage referral could drop. So don't miss the word could there. Mortgage arrears could, okay, or the first line said home prices could fall. So these are not your friends. These are your enemies actually. Because if it said for sure it would move, then that's a different story. And I'm going to stop at this point because I don't want to get to media news. This is what we do routinely every week. We review what the news is, they stat all the information and the direction the market goes. And we are choosing the right neighborhood to invest in real estate and to give you some information of how much you can make and what neighborhood is moving up, etc. So I'm going back without any further waiting here. I invited Adney Fernandes. He is a great guy. I met him almost a year ago in one of the real estate investment seminar. And contrary to many other investors, he is focusing on multiplexes successfully for the last few years. I let him tell you his story. And grab a piece of paper and a pen and write down anything he said. He is amazing. He has his own strategy. And Adney, the floor is yours. I'm going to switch to your presentation. By the way, the information here you see on the screen, write it down, the phone number. If after you want to talk to Adney directly, that's fine. Let me see if I can get you back here. So here you help me, Adney. What's happened?
Okay, so let's see here. Can you see my screen, Ashton?
No, I don't see your screen.
Did you stop sharing yours? So press stop sharing on yours.
Right. I see your screen now. Yes.
There you go. Okay.
Yeah.
Fantastic. Fantastic. Okay. So I hope everybody can see my screen. Thank you for inviting me, Ashton. So it's really is a pleasure to be here. Actually, it's unfortunate that we don't get to meet in person as much as we'd like to anymore, but it's always great to coordinate and to talk about investments like this. So, guys, my name is Adney Fernandes. I actually started a multifamily and commercial investments club about a year and a half ago. It has been growing pretty rapidly, and we usually host in Oakville, but we'll talk about that a little bit later. So, usually with a lot of speakers, I like to know who the speaker is, a little bit about what they've done. So, before I launch into the benefits of multifamily and commercial, I'll just tell you a little bit about my background, and it will at least frame me giving you the advice. Okay, so I started about 15 years ago. Like honestly, like everybody else, I was actually working 3 jobs. So I was working 2 full-time jobs and 1 part-time job all at the same time, about 100 to 120 hours a week. And I was also doing real estate on the side. You can imagine it was very grueling for a couple to do that for a couple of years. I realized at one point I had to pivot from residential. So I was doing residential properties before. It was fine. It just wasn't doing enough for me personally. I wanted to do real estate full time. So 15 years later, I'm now managing about 12 to 15 million in strategic assets. I've cut down my hours a week to 10 to 15 hours a week. And my focus, my why, honestly, is family. So I've been a stay-at-home dad for the last 11 years. So I stay at home. I'm a stay-at-home dad first, and business comes second. I only do it about 10 to 15 hours a week. Okay. And I'm focusing on helping other people get to a point where they can perhaps spend more time with friends, family. Maybe they can focus on what they really want to do. So at the moment, I have 5 different companies. I am the president and CEO of all those companies. So I run my companies, and if need be, I may sell it off in 15, 20, 30 years' time. Okay, that's the goal. That's my exit. So I do specialize. So for my first company there, A2 Real Investments, I actually do specialize in raising money. The reason I raise money is to actually acquire strategic multifamily and commercial properties. So part of my strategy is that I'm going to acquire them, I'll reposition them, make them better, and then I'll keep managing them until I refinance and or sell for a tidy profit. So a couple of assets that I've bought in the last 15 years include medical buildings, mixed use multifamily buildings as well, strip malls, plazas with flexible spaces, retail, office, warehouse. I've raised personally over 30 million in the last 5 years to fund the commercial properties. I've also mentored several people in the last 7 years. And just to give you an idea, I actually do teach people how to raise money. So I've taught realtors, mortgage agents, brokers, I've taught investors, lawyers, accountants. So I've taught a lot of people how to raise money, how to acquire multifamily, how to manage it, do it strategically. And some of my clients have raised 5 million over the last 3 years. Okay. So just to give you an idea of my current portfolio, I have a medical plaza right now. I also, on the opposite end, have acquired 16 acres of land that I'm developing. So it's just giving you an idea of what's currently in my portfolio that I'm actively working on. Okay. So here's what we'll do. Let's launch into some fun facts about commercial. So this is why you're here. This is why commercial, multifamily and commercial, should get you excited. Now, the pictures that I brought up are really of medical buildings. Okay, so On the left, medical building with offices up top. On the right, it was actually an office plaza that they converted. Okay, they bought it as an office strip mall and they slowly converted it to medical. I'm just putting those up there to give you an idea. When I talk about commercial during my presentation, I'm also including multifamily. Okay, so anything 6 units and up is considered multifamily commercial. So I'm also including that in the presentation. Okay, so let's talk about right out the gate, what are some of the benefits of commercial investing? Okay, so again, when I say commercial, it's multifamily, retail, office space, warehouse, okay? It's all in commercial. So one of the biggest benefits you're gonna see here is a bigger ROI, and that's a return on investment. You are going to see a bigger cash flow. For those of you who want to replace your income, you're going to see a bigger mortgage pay down because you're no longer buying a $500,000 or $700,000 house. Okay, when you buy a house at, let's say, $500,000 for an investment in, let's say Brantford, for example, you're probably putting 150 to 200,000 down, and you have a mortgage at 400,000. The good news is your tenants are paying down that 400. The bad news is it's only 400,000. So I regularly buy properties between 3 to 5 million. Okay, so let's say I'm buying a $5 million property. I put $1 million down. I have a $4 million mortgage. Now imagine my tenants are paying down that $4 million mortgage, not 400,000, 4 million. Okay, which one would you rather have? If your tenants are going to pay off your mortgage anyway, might as well pay off the $4 million mortgage, right? Okay, so the appreciation too, so the appreciation on commercial property is really good because again, you're not making the annual appreciation that we all make on our properties. We're not making that on a $500,000 home. We're making that appreciation on a $5 million property. So even if the residential and commercial make the same appreciation, let's say 10%, the commercial is going to win because it's 10% appreciation made on $5 million property. Okay, so the second point here, there is more of an opportunity to create a bigger margin or forced equity. So basically on a $500,000 residential property, you can only bump up that price. You can only force the appreciation up so much. There's a limit. So maybe if you do the right kind of renovations, you might be able to bring that price point to 700,000. Okay, so from 500, you put 100,000 of renovations in, maybe now the property is worth 700. That's good. Okay, nothing wrong with that. But on a commercial property, if I'm buying a $5 million property and I put 100 to 200,000 in on that property, what I found is that that property is worth actually somewhere between 5.6 to $6 million. I'm able to force appreciate that property a lot more than residential. So the margin is generally much bigger. Okay. Another point that I have here, the third point, I found that most multi-units and multi-unit commercial, like retail office space, I have found that they are more streamlined. You're not struggling as much with the smaller units. You're actually managing, you're paying less money per unit to manage multiple units. So I have found that I save a lot of money by having many, many units in one building versus buying a house and just kind of renting the top and bottom. Okay, I end up saving quite a lot of money on operations and management. So another opportunity here is, another fact here is the opportunity to create multiple streams of income other than rent. So I do want you guys to pay attention to that fourth point. Everybody thinks that rent is the only income. It's not. Okay, there's rent. There's also rent from parking, rent from coin laundries, rent from advertising, rent from storage units, rent from developments, and I could go on and on about this. I will touch on this a little bit more. what I have found personally is that with a commercial property, because it's bigger, you have more opportunities to create other streams of income other than the rent. Okay. So fifth point on the benefits there, AAA leases. Okay, now you're renting to you. There is a potential, depending on location, depending on quality of the building, depending on the management and operations. So that's me. So depending on all of those, you can actually rent to McDonald's, you can rent to Wendy's, you can rent to Mr. Lube or Jiffy Lube, who are AAA mechanics. You can rent to single A, double A, and AAA tenants, and those tenants are like gold. No longer are you struggling with 1-year leases. I mean, it's normal for me to have 10-year leases. In fact, that's what I'm averaging right now. I have 5 to 10-year leases. I actually have one lease I'm working on currently with the doctor. It's a 25-year lease, okay, with escalating rents. That's the thing that I can do that I could not do on residential. So when I used to own condos and all, I could not raise the rents because obviously they're regulated by the government of Ontario. You can raise it by, I don't know, 0.02, by 0.5%. If you're lucky, you can raise it by 1%. In commercial, I am the one that dictates what the rent is gone up by. I have actually, this happened 2 years ago, I actually doubled a person's rent. So it went from, no, tripled actually. So it went from 25,000 a year in rent to 54,000. Okay, and he accepted it, and I got a 10-year lease out of it on top of that. Okay, and it was an escalating lease. So just giving you an idea. So on top of the AAA leases, it gets better. So the AAA leases usually have the tenants paying for utilities, taxes, insurance, maintenance, and much more. Like, I won't get into it all, but basically I can get a commercial tenant to basically pay for all the expenses that I would normally be responsible for on a residential property. Okay, it's a huge benefit, huge benefit. That just, what that means to us as investors is it's more net income. Okay. Here's the other good benefit. So I'm at, let me see, number 6. Okay. Lenders treat commercial investing like a business. And I have found that they do give you more capital. So right now, if you're doing residential properties, you and I both know there's a limit on how much you can buy. Okay, so on top of you having to save money for a couple of years and then going and begging money from the bank or credit union or investment firm, for a mortgage, and then them coming back to you saying, are you making a higher income? You need to qualify. What's your credit score like? What's your wife's credit score like? In commercial, all that doesn't matter. I could make $0 a year. I could make $0 a year in income. Okay. I could still get a loan for a couple of $1 million easily. Okay. It's really not hard to get a commercial loan. Okay. Now you do have to be prepped and prepared. It can be a little bit complex. So you should have a mentor when you're doing commercial, something I will suggest later as well. But lenders, if you come to them with a commercial loan request, they treat you like a businessman. They don't treat you like the average person. They don't look at your credit score. They don't care about your job. They care about your experience. How are you going to manage their $5 million? Are you going to be able to repay their loan back on the property that you're buying? Okay? They treat you like a businessman. It's much easier to get capital from lenders. I have no issues. I've gotten more than 20 million worth of loans over the last 5 years alone. It's not hard. Okay. Business owners, I found, take more pride in their property. Okay. What I found personally is that because most businesses are in the mindset of generating foot traffic, generating revenue, generating sales, it's in their best interest to keep their office or retail space or warehouse really clean. Okay? They'll fix any problems, any heat, hydro, fire, water, okay, roof, whatever it is. It's in their best interest to do the maintenance repairs and make sure that the building stays in great condition. What I found is personally, business owners don't treat their locations like garbage. I've I think only once in 15 years had a so-so commercial tenant who didn't really care about curb appeal, but that's one in 15 years. Okay? Everybody else loves their location and they take care of it. I don't. Okay? Here's another good point. So I'm on the third last point here. Limited hours of operation. This is really important. You know, when you have a residential property, just think about this. People are living there 24/7, 365 days a year for the next however many years. Okay, there are lights, there are fans, they're walking around, so there's regular wear and tear 24/7. Okay, so even when they're sleeping, right, they leave night lights on and the AC and the HVAC furnaces are going. Like there's always wear and tear on the property. With businesses, they generally operate during business hours. Okay, there are a lot of businesses that operate, let's just pretend here, from 9 to 5. And then maybe you give them an hour in the morning, an hour in the evening, because they have to open up the business, close the business. But basically, your evenings and weekends, your property is not really being used. Okay, there's less wear and tear on the property, which means there are less problems to fix, less repairs, less maintenance. So that alone, I won't say longevifies, but that's not really a word. It increases the longevity on a property right there alone. If your business owners are only there during business hours, let's just say, they're not really there during the evenings or the nights and the weekends, that actually doubles the economic life of your property. You don't have to put as much money into repairs and maintenance because people are not using it 24/7. Okay, they're using it maybe 10 hours a day, maybe. Make sense? Hey, second last point, objective price evaluations. With commercial, what I've found is on the multi-unit and the retail office warehouse side, the evaluations are based on income. They're based on, it's not just comparables, they're very objective. They're much less emotional. When I do evaluations, when I do appraisals, when I do inspections, I don't cry over 50,000, 100,000 here or there lost or gained. It is what it is. It's a business. Okay, it's what your appraisal is going to be just based on your income that's coming in, the quality of the building, the location. You kind of know where you're supposed to be. Okay, the last point, actually, this is a huge benefit that a lot of people don't think about. When you buy that $500,000 house I was talking about, there's no flexible use. You can use it as one thing, an apartment. You can't use it for storage. You can't use it as an office space. You can't use it for anything else that it's not zoned for. However, if you're buying a commercial property, I could normally use, let's say, a strip mall, a plaza, an office building. I can actually use it as an office space. I can use it as retail. I can even use that same space as a warehouse. So depending on where the economy is going and what I can charge a high price per square foot on, office, retail, warehouse, whatever it is, I can change the use without changing the zoning on that property. So it allows me to be a lot more flexible on a commercial property. Okay, so I thought I'd throw in a couple of bonuses here. So let's talk about what I was edging on earlier. Multiple revenue sources in commercial. Okay, so a lot of people focus on cash flow, but when you're buying $3, $5, $10 million properties like me, I focus on a lot of other income streams. Okay, that's what this is, income streams. I make a higher cash flow on most of my commercial properties. One that I did about 2 years ago, I was making 4,000 a month in net cash flow, and ever since then, I've been able to increase that to 7,000 a month in net cash flow a month, and that's one property. Okay, and I found, again, I've explained this before, mortgage pay down. If you have a bigger mortgage that the tenants are paying down, you make more money. And that money it belongs to us, the investors. Okay, so once a tenant pays it down, that equity belongs to us. Another one is property appreciation. You make more money on property appreciation because the property is worth, let's say, $5 million as opposed to 500,000. Okay, another revenue source is forced appreciation. I've mentioned this already a little bit. You can make a bigger margin on the forced equity. So basically, that same 100,000 you'd put in for renovations, you'd actually make a lot more money, a few $100,000 to a few $1,000,000 more on commercial. Okay, so the fifth point, super important, alternative income. I can actually add, I was telling you before, coin laundry, I can add Wi-Fi. I'm going to leave that for now because I've got another slide for it. So I'm going to open up your eyes to alternative income, okay? I'm going to give you some real data that you can use for alternative income. So I'll leave that alone for now. The last revenue source that I like on commercial properties is development appreciation. Basically, on a commercial property, if I change the zoning and the usage, okay, or if I add a use on top of what it's already being used as, I can actually make development money. Okay, so I've bought properties, office buildings, I've converted them to medical, so excellent use. I always look for highest and best use. Once I've converted it to medical slowly, I then go back to the city and I say, can I now build on top? Can I build a 5 to 8 story condo building on top of that medical building? Okay, so as soon as I get that zoning change or that zoning addition or the amendment, I now am going to make development money. And development money, just so you guys know, it's not like $1 million or $2 million. You can make $3, $5, $10 million more than what you bought the property for. Okay, so that's a strategy that I have. In fact, you know what? I'm going to stop right here. I'm going to tell you guys, so give me a second here. So all the way at the bottom of that screen, I said there's a $1 million real estate formula. Why don't I tell you guys what it is? Okay, because it took me a while to come up with it. I'll just tell you what the strategy is. My strategy is for every commercial property that I acquire, I want to profit $1 million to $2 million within the first 3 to 5 years. Okay, I'll say that again because it is important. For every property that I acquire, I want to clear $1 million to $2 million in profit every 3 to 5 years. Okay, that's how I've been able to really buy $6-7 million worth of property, and it's now worth 12 to 15 million. Okay, most of that is equity. Okay, so I just want to throw that in as a little bonus for you guys. So,
sorry to interrupt, and that's a practical thing to find in the past, this kind of a strategy.
Yeah, it is
averaging your first investment.
Yeah, a lot of, you know what, a lot of people don't come up with a strategy, Ashton, which is why I'm giving mine away. What I found is people have a generalistic view, right? They're like, okay, I'm going to buy this property, then maybe I'll rent the top and bottom, maybe I'll change the zoning later, and in 25 to 30 years when my mortgage is paid off, now I'm going to retire. I think of it in a different fashion. I always think, Ashton, how can I buy a property today, make a good income off of it, and then as I'm making an income off of it, like I'm living off of it, it's my job, how can I also profit $1 million to $2 million in profit, within 3 to 5 years? And if I can do that for every property that I buy, which is what I do, I buy 1 to 2 properties a year. So imagine now, I'm buying 5 to 10 properties over a 5-year period, and each of those properties is making me $1 million to $2 million in profit each. Imagine the equity that builds up just in a 5-year period, right? And I have been able to do it. So it's not just me coming up with anything. I came up with this strategy just 8 to 10 years ago, and I've been developing it. And in the Ontario marketplace, it works. I don't invest anywhere else outside in Ontario. Ashton, it works here in Ontario. I'm able to do it. Okay.
That's a little bit of what I also do with when I buy a residential. Okay, the growth per month or per year is important. Like anywhere I buy, we're talking about 8 to 12% growth per year. Now, is there any way to improve the growth? Yes. For instance, you can buy a house and make a legal rental basement, which adds value to the house. So there are different strategies in residential. I'm glad you brought it up. You can do that in commercial, and that's brilliant.
Absolutely. Absolutely. You definitely can. So the 8 to 12% growth, by the way, is really good in residential. When I was investing in condos and houses, I wasn't able to get that growth. So I was obviously doing something wrong, and you would have come in handy for me 15 years ago. But because I was so bad at investing in residential, I pivoted to commercial. But again, commercial is not easy. So I just want to say this to everybody. You must have a power team. Okay? When I say power team, I do mean mentor. That's top. You need somebody governing your strategy. You need somebody who's been doing it for 10 years and is a millionaire doing it. Okay? You get your advice from that mentor. Okay, but you also, very importantly, you do need a realtor. Ashton, often I see people trying to avoid going through a realtor. And I honestly think, as a guy who's been doing it 15 years, that's a big mistake. There are so many things that an objective person can see, like a realtor, because that's what they're paid for, right? They are paid to not be emotional about the deal. They are paid to be objective and just see the deal from a transaction.
Adding to what you said, I think it's important to, as a real estate investor, to qualify the people. I've seen lawyers that are really goofing up a deal.
Yes.
Like you have to deal with professional people, even real estate agents. And I always tell my investors, listen, you go tell, and that's how you find out this person is qualified or not.
Yeah.
No one cares about your money than yourself. And that's the way it should be. Correct. That's number one. Number two, you grab the phone. This Ontario is full of agents, right? You grab the phone, say, Mr. Agent, I want to buy an investment property. What should I do? As soon as they say, well, buy this one, buy that one, with no fact, stay away from, just hang up.
Yeah.
Go after agent who has done many investment in the past, dealt with tenants, with management, with every aspect of real estate investment. If the real estate agent doesn't have any investment at all, or has one or two, what a big deal.
Yeah.
Just work with a pro. And that person is going to take you long way, and you're going to be very successful.
Yeah, that's exactly it. And Ashton, to that point, it has taken me years, okay, not months, years to build a qualified power team. I can objectively say, I have a real estate lawyer, a real estate accountant, like a professional corporate real estate accountant. In fact, I have two of them. I have 2 lawyers, 2 accountants. I have 2 realtors that I deal with. And those realtors, it's taken them 2 to 3 years to get to know me. I don't do deals with just anybody that I meet because I get offers from everybody, but I qualify them to work for my company. And I suggest a lot of people build their power team, have a mentor, have a really good realtor who is looking out for you. Super important. They're going to get paid no matter what they do, but having somebody that cares, that's looking out for your interest, that's a big deal. Same thing, mortgage agent, broker, maybe get it from the realtor. A proper lawyer. Oh my goodness, I've seen lawyers make mistakes too. People assume, Ashton, that just because they are a lawyer, they do everything the same. No. Lawyers have made lots of mistakes. Same things with accountants. There's a big difference between a good power team and a really great power team. a great power team can help you double your portfolio. Okay, so here I want to throw out something here. A lot of people, Ashton, ask me, what kind of income can you create on a commercial property? Because you're buying it for potential, right? You're buying it to make a higher amount of income per month or per year. So here's an idea for your folks, okay? So alternative revenue. So when I get the rent in good condition, as in I'm churning over the tenants, I am getting the leases from 5 years, 10 years, 25-year leases. As that's being done, I'm also doing this, okay? So alternative income, the third point there, I will add advertising on a property. Okay, I will add storage. So I've actually bought those little storage sheds from Costco, Home Depot, and I've actually put it in the back of the property that nobody's using anyway, and I've rented them out to people, to the tenants in the building. Okay, I've rented out, so coin laundries, obviously, made pretty good money from that. That's an all cash business. In-suite laundry, there's another one. So in-suite laundry, I will actually ask a tenant to opt in for the in-suite laundry. And as they use it, I'm actually charging them $75, $100 a month for a flat fee. And I know that they spend, $25, $30, $50 a month on the hydro. Okay. So I know what the average cost is for the hydro, and I keep a margin and then profit as well. Okay. Here's another great idea. I have rented parking lots. So, you go to strip malls, plazas, office buildings, they're generally filled with cars. Ashton, I fill them up with chip stands. Okay. I have second parking spots that I rent out to people, couples, families. So my multi-units they always come with one parking space only. If they need a second parking space, I charge for that. Not exorbitant, obviously, but $50 a month, $75 a month. Normally, I would have made no money on that second space. And there are some families that actually require 3 parking spaces because it's a multi-generational family. Okay. Another idea, vending machines. Okay? Vending machines have made me money for a long time. You have to stay on top of it, but vending machines work. Charge for Wi-Fi and cable. Here's what I do. I'll buy, let's say, a 20-unit building. Okay, it's very easy. Buy a 20-unit building, call Bell, Rogers, or one of the courier providers, talk to their commercial department. They will give you bulk pricing. Usually that's between 10 to 30% off regular pricing. Okay, you pay them the bulk rate, they'll supply the Wi-Fi, cable, everything for the whole building, and then you get to charge the normal rate to the tenants. So your margin is about 30%. You're making a 30% margin off Wi-Fi and cable. Just an idea, okay? With the alternative income, you do want to use your imagination, your creativity. You can make, I've seen people make money lots of different ways. I won't get into it, but there are people that make money lots of different ways. The more creative you are, the more work you're willing to put into your property, the more income you can make. Look, I've just listed off 7, 8, 10 different lines of revenue on top of the rent that you can make. Okay, it's just something to get you going, something to think about. If you can apply this to a residential property, please do. That's fantastic. I won't get into this because I do have about 2 minutes left, guys. So I was going to go through this, but these are the list of best tenants to go through, but I can do it at a different time. I'm just going to close this down. Here's a few tips for investors, okay? Make sure you clean up your portfolio today. Talk to your power team, your mentor, your realtor, your mortgage agent, broker, your lawyer, accountant. Clean up what's not working today during COVID-19. Because if it's not working now, it will not work during the next economic crisis, okay? Sell off your smaller properties, upgrade to bigger for the reasons that I listed previously. Make sure you do your taxes. That's a big one, because it really hurts when you want to buy a property. It's a great deal, but nobody's giving you financing because you didn't do your taxes. Okay? Because you're going to stress out your realtor, you're going to stress out your broker, your lender. Do your taxes. Okay? Pay attention to the legal clauses. Really have a good lawyer to protect you. I would also highly recommend to refinance today and borrow with the low interest rates that we have. Lowest interest rate that I've seen, because I do refinancings as well, is 1.7% was the lowest one that I've gotten. Okay, on a refinancing, which is really low. Make sure you learn how to analyze, acquire, and manage bigger properties. It is a skill set. Like being a realtor, like being a lawyer, like being an investor, it's a practiced skill set. If you don't practice it, if you don't keep improving on it, it's like a muscle. You got to keep doing it, okay? Do partner up with a commercial expert. Don't take all the risk yourself. Partner up with somebody. Learn how to raise money. That's a good one for everybody to learn. Doesn't matter what you're buying. Learn how to raise money. Get a mentor. And like Ashton was pointing out, I do run the OnCom events. This is my last slide. I do run the Ontario's Multifamily and Commercial Investment Club. It's just a club of us that get together and talk about and educate ourselves on how to buy more multifamily, how to level up to commercial. You know, what skill sets do you need? Okay. The next event is on Thursday, July 30th. So at the end of this month, you can go to my website. You can also view past webinars on my website as well. Make sure you take down the website and do take down my email or phone number. If you feel like you want to have a conversation about mentoring, about partnering up, you know who to use for your power team, I would obviously recommend Ashton as your realtor, but make sure that you give me a call if you do need the advice. And like I said, build out your power team, guys. This is the way to go. Think about how to double your portfolio in the next 3 to 5 years. It doesn't matter how much you have. How do you double that portfolio? Ashton, thank you so much. I really appreciate the opportunity. I hope you and your investors have found this helpful. I'm happy to discuss other items as well.
It was amazing. As a matter of fact, if the participants would like to come up, ask the question, or they can always type here. I have a few questions that might help everybody else. How do you manage your tenants? Do you have a management company taking care of it, or you do it yourself?
Correct. So Ashton, here's the way I do it. Now, this is not right or wrong. Okay. So when I was managing my own portfolio, so like everybody else, you know, I bought a couple of condos and houses. I was self-managing. What I realized is that property management is not fun for me. It's a lot of work. You don't really make a lot of money. So I knew that I wanted to be a stay-at-home dad. I only want to work 10 to 15 hours a week. So when I buy a property, Ashton, I build in a property management fee. I always hire a property manager or a superintendent to take care of the day-to-day operations management on the property. I am strategic, so I oversee the vendors, right? So I oversee the lawyer, the accountant. I oversee the plumber, the electrician, the property manager. That's my job to oversee, but I let them handle the day-to-day. And I think that's a really good use of time for most people.
Other question I have for you: how far? You said you're not going to go outside of Ontario. So looking at some of your portfolio, just give me an example of 2 or 3 of them. How do you spread them? Where are they?
Okay, so I have, like I was telling you, I manage 12 commercial properties. I manage 74 units. I have properties, so only in Ontario, okay, only in Ontario, but I do it in most major cities in Ontario. So I have properties in Toronto, okay, I have properties in Guelph. I have properties in Barrie, Aurelia. I actually have a medical building in Sudbury. Then we go west. I have properties not in Hamilton, but Brantford. I have properties in Niagara Falls. Okay, I think I'd mentioned Guelph. I have another one in Chatham, a 26-unit building in Chatham. So personally, I'm a big fan of economic indicators. I don't really like to invest in really small towns with no strength
Yes.
in the economy. I actually like the bigger cities. So, and I also like, let's say, Barrie. I like Aurelia as well because they're touching together. Okay, because there's a ripple effect. So if Barrie is doing well, Aurelia is going to do well. If Hamilton is going to do well, Brantford is going to do well. So it's a ripple effect. So I like neighboring cities. So I'll give you another example. London, Woodstock. Okay, so I like places like those, but again, strong economic indicators. Because Ashton, like you, if I don't have to worry about emigration into the city, you know how many employers are there in the city, what city infrastructure building. So the city is doing all the work for me in the major city. All I have to do is buy my building, manage it well, and the city will help it grow.
This is another pitfall I see with investors, newbies, that they are after one element, and that's price. If
Yeah.
they think the price is good, they
Yeah.
buy it no matter where,
Yes.
versus looking at the fundamental, which is location, location, location. So any city you go, you have to justify your purchase. If
Yes.
there's any supporting structure, economical structure for your purchase. If no, please do not get emotional, fall in love with a building that looks great, but there is no supporting factor with your investment. So that's very crucial.
Yeah.
The other question I have for you is entry level. I think some of our audience are interested to know. Let's say someone wants to get for the first time into real estate investment, commercial or multiplexes. What kind of budget are we looking at here?
Okay, so here's the best part. If you're looking at an entry level, let's just say multifamily, because that's entry level, okay? Let's just say you're buying houses, maybe you're thinking about duplexing, that's small residential. When you upgrade like entry level into multifamily, what you want to do is actually buy, I'm going to say a fourplex, fiveplex, or sixplex. That's entry level. Now, it also depends on location, city, the tenants, the strong leases, the economic fundamentals. You're usually looking at a budget on a 4 or 5 unit building from $500,000 all the way to 1.5 million. I'm going to put that range in there, and I'm trying to be fair because if you go to Toronto as an example, to buy a triplex is about 1.2 to 1.5 million. If you go to Hamilton, you might be able to find a triplex for $1 million. If you go to Brantford, you might be able to find a sixplex for $1 million. And I'm talking about good assets. I'm not talking about the run-down properties, bad curb appeal, the roof is caving in. Those are not the kinds of properties I buy. I personally mentor people into buying grade A or grade B properties. So Ashton, maybe you could elaborate on that, right? So what's the difference? Like, why shouldn't we buy a grade C or a grade D property? Why do guys like me prefer grade A or B properties, right? As a realtor, what would you recommend to buy? Would you recommend buying like something that has fire, a flood,
Well,
real bad condition?
yeah, to start with, we know there are different ways of investing in real estate. One of them are buy and flip.
Yes.
Then they dive into this, I call it troubles kind of homes,
Yeah.
because they know what they want to do. At the end of the day, they have to add value to that property to justify their new price and their profit. Generally speaking, for buy and hold, what I would always recommend is buy something that is plug and play. You don't have time to go and start fixing things in your house. Get something that is really ready to go. Also, doesn't take the money out of your pocket. Once you buy the house, it's your mortgage, and there's a set amount of money per month that you pay. Once you buy a house that is C level and you need to be there all the time, you need to bring contractors, and that's not part of your schedule, then stay away from it, because every single day you have to put money from your pocket on the table. And that would cost you not only time, but also your money in your pocket, unless you buy a property, you want to make it finished basement, legal finished basement, or you purposely knew that what you're buying, you need to do certain repair to the house. Let's say you want to remove the carpet, put hardwood floor. These are easy. But I'm talking about a little bit more major issues that you have to deal with the house. So basically, a rule of thumb, buy something that is plug and play.
Yeah.
That's what I do. Well, another question I have for you, and then if anyone else has a question, is ROI. Is ROI the only criteria you go after property? Like, let's say you buy something in Kitchener Waterloo, and ROI, return on your investment, is 7%. Okay. Is that the only criteria you're looking at?
No. So me personally, I have I have lots of criteria. So right now, I actually don't buy a property unless the ROI is 20% or more. In fact, the average ROI that I'm seeing in the properties just over the last couple of years is between 30 to 40% on commercial. And that's annual, by the way. So my criteria, one of my criteria is a 20% ROI minimum. And I classify ROI as cash flow, mortgage pay down, and appreciation. That's it. So the rest of it, you know what I talked about, the forced appreciation, the alternative income, and the development, the sixth one, the development, that's all extra on top of that. Okay, so I want a minimum of 20% across cash flow, mortgage pay down, appreciation. The other indicators that I look for is a good location. So I like it to be in a major or a minor city, right? It's got to have a good amount of population. It's got to have a good infrastructure. Like the city has to be well built, and the city itself, the city should be funding the infrastructure. Okay, they should be paying for social services, upgrading the roads, building more highways. That's what I look for. So the way I look at it, it's like a nice flower bed for all intensive purposes. I'm putting my flower in somebody else's beautiful flower bed. I'm looking at the flower bed, it's working. So the city is already working well. It's got good jobs, it's got good people, right? A good array of people. It's got social services, it's got infrastructure, good buildings, it's got good growth. When I see those 5 to 10 or 15 indicators, then I invest. And an ROI is just one of them. Because I have to assess risk over 5 to 10 or 20 years, right? I can't just look at ROI. I wish it was that easy, but that's what I used to do before. When I did residential, Ashton, all I looked for was cash flow. Mm-hmm. That's it. I didn't care about anything else. I didn't care about location. I didn't care. All I wanted to do was put the least money down. If I could put 1% down and buy a property and make good cash flow on it, I'll buy it. Didn't matter where it was in the world. Now it has changed because I know there's a difference between making an income, which is cash flow, and creating wealth. So I want millions of
in Sudbury or London, Ontario, you just go for it.
Yeah, so the location does matter. I want to make sure it has good economic fundamentals. So Sudbury is fantastic. By the way, for a lot of people who are looking for investments, Sudbury is good. Orillia is good. Okay, I would not suggest Parry Sound right now. Don't worry about just major cities, but look at the cities that are attached to it. So think Toronto. Okay, Toronto might be a little bit too expensive right now, but look at Vaughan. And if not Vaughan, look at the city above it. So King City, Innisfil, that sort of thing, they are on a growth pattern. Maybe look at those. Okay. Like I said, I have 10 to 15 indicators I look at. ROI is just one. And I've given you a few examples of the other ones. So you really got to start doing your research.
Absolutely. Listen, this is full of, I think we need a few weeks to digest what you just said. I think we could bring you back to this webinar again. I think there's a lot of demand for that. I really appreciate your time. Just covering the last session of this webinar is I always do research and always give tools that I use.
Yes.
Whether you're agent or you're not, doesn't matter. These are the tools that are there available to you. I can always assist you, help you on that one. But one of the first tool I always use, and it's not, you might have come across this one as well, is we call it home price index.
Yeah.
This is one of the things I check every month because it's coming every month through Toronto Real Estate Board, and everyone can have access to it. It basically shows you different cities around GTA, in GTA, and the different neighborhoods and the growth of those neighborhoods. So what I'm looking at here is the growth in 5 years or 10 years. So question here is, instead of investing in, let's say, street real that I see 87% growth in 10 years, I go somewhere that has a bigger growth, such as Clarkson. This is not a forecast, it's happened already. So you have to follow the pattern that we see here, and that is giving you more return. Now, the other tool, well, this is for everybody else. If anyone likes to get more information about investing, I put a lot of video clip here in my YouTube channel. These are all there for everybody. They can always go and use it. You can always come onto my Facebook that is done professionally for professional real estate investors, called the Successful Real Estate Investors. You just go and click there and become a member. Here and there are good topics that's coming up. Sometimes people ask questions are answered. This is one of the latest books I printed, Successful Real Estate Investors. There are a lot of strategy techniques that I use all the time that I put in there. Is the easy reading as well. You can get it on Amazon.com. Now, let me just go to the next one. I also have my online course for those people. The reason I prepare this course is, believe it or not, because I'm dealing with a lot of investors, and on a weekly basis, they come with a booklet, blank booklet with questions prepared there. Sit down for hours, and I have to repeat the very same thing and tell them where to buy, what to buy, how to buy, what not to buy, the pitfall, etc. So I thought it's easier for me to prepare this course, put it online. If anyone's interested, by all means, they can go and get a lot of information there through this. Now, this is the top part is my site. You can get this information from any other site. It's just basically the calculations tools that you need to have to calculate your mortgage, the land transfer tax. These are basic. Now, towards the bottom is the rental property calculators, and I put a site there, the address. You can go there and figure out how much going to be your property's value and rental, if it's worth it or not, to do down payment and everything. Next site is listing.ca. Is a free public site that can also give you the history. Let's say you go and find on one street, let's say Eglinton, this beautiful house. You want to find out what is the history, what's happened to that house. Are you buying it at the right price or it's overpriced? You can easily have access to it, and this is a public information. Tenant screening is an interesting site. It's an American-based site, but they open the doors to Canadian as well. So what it does is, whenever you want to put a tenant into your property, you get all the information. You just simply pass all the information to this website. They do the analysis for you. They check the background of the tenant, everything. Once they approve your tenant, anything happen after the tenants start moving to your place, let's say they don't pay, you need to bring legal people to vacate the property. They take care of it because they accept the responsibility. They take care of that part as well. However, there's a monthly fee that you have to give them in order to get the screening of the tenant and follow up with procedure if there's anything happen. But that's kind of guaranteed. This is another site that I find it very interesting. Many investors, they are thinking that they can, because the rent for residential is not moving up very well. And the landlords are thinking, if we come with the excuse that we are going to do a major renovation to our house, we can have that excuse and send the tenant out and then bring another tenant with higher rent. Well, that's not the case, because if you are filing for major renovations, and that's a good excuse to ask your tenant to leave, you have to register with city. And this site, a tenant can go to this site, renovations TO, and search if you are truly did what you're supposed to do. And if they don't see you filing your renovation with the city, you're in big trouble. They can get a report from here, and then they can sue you. So be careful. This is another tool I use. It is by, what's the name? I'm just covering here. Oh, here you go. realsoapy.com. This is a great site. You can do, this is a research site. You can do any kind of research you can. Here's, on this page is basically shows you what is the hot neighborhood, what is the average neighborhood. That will give you some trend of where you should go for investment. Of course, you're not going to buy in the area that is very expensive. This is not the only tool you should use. There are many tools that you have to put it together. And this is what I do for all my clients. I'm using all these tools on a daily basis. I want to make sure they are successful. I do real estate investments. I do residential. I'm very interested to get into commercial and multiplexes. This is what I think. And what I noticed with multiplexes is bulletproof with recession. So it doesn't matter, the market is up and down. You have so many tenants that are participating. Forget about COVID-19. They are all participating to your income. So if one tenant start acting up, don't worry. You are backed up with so many other tenants. And as Andrew said, you can qualify and make sure you bring AAA tenants so they're not acting up or playing game here. And any question for me? I think you're getting close to the end of it, our session. It was a pleasure, Adney, to come here. I'm sure the audience here got your information, and I look forward to have you here again with more in-depth information and tell us your techniques and strategy that you use all the time, and maybe we can get together.
Absolutely. Looking forward to it. Thank you, sir. Thank you very much.
Thank you very much. And that is the end of our session. Thank you, everybody, for joining, and see you next week.